Hi traders and welcome to Pepperstone's market wrap on Friday the 5th of June. So I've seen some really good movements this week. The continuation has happened since the early part of the week where the US dollar based pairs except the US dollar yen have basically fallen off a cliff, broken all serious levels of support, and the dollar index has certainly played a big role in that. So we'll jump straight in and see if we can identify some opportunities for later today and maybe the start of next week. Alright, so I'll start with the Aussie. On the daily, we can see we've had that really good break over here. It's been a very, very big week for the Aussie, as you can see. It broke earlier in the week and pretty much blasted above the 200. So, look, it's pretty much hit the place. It went all the way to nearly 70. It was only about 10 pips off the 70 cent mark. So, I guess it's no surprise to see it take a little bit of a pause here. It's going to need to probably come back and have a bit of a pullback for mine, really, before I get excited about going long again. I mean, it's certainly got the 70 in its sights, and I could see it probably retesting it a little bit. I don't know if it'll just completely sell off from here, but you could definitely see it sort of pulling back and maybe, probably a fib of this move, maybe we'll draw a fib there, because that's probably what I would expect. If it's going to stay strong, what you're probably looking for is, maybe a pullback to the 38.2 or the 50, probably not a lot further. I don't know if I'd want to be going much further than that. If it's going to really test up the upside, it needs to keep this momentum up. So ideally, what you probably see here is a pullback to the 38.2 or 50 at the probably most, and then a smaller time frame change of trends, let's say on a 1 hour, and see if it can pick up some momentum again before it hits the 70. If it doesn't do that, it may well just continue selling off. So probably not one I'm just really getting excited about now. It's probably done its thing. Everybody should have been able to get a good part of that long because we've been talking about it for a while. So hopefully, you definitely should have taken profit by now. If you haven't, you probably need to start thinking about it because it's probably going to pull back to this area. So just keep an eye on that. If you haven't taken your profit, depending on where you entered, of course, just keep an eye on this reload area because it may sell off from this part. All right, we'll move on to the US dollar CAD. Okay, so we had that terrific break of that triangle, obviously a couple of weeks ago now, and it's continued on its merry path. You can see it just does the beautiful little pattern here that you really want to see. You don't want to see just a complete sell-off most of the time when it consolidates and thinks about it. It could have done one or two things here. It could have gone up and retested it, that bottom of the triangle, but the selling pressure was strong enough that it didn't even retrace and it just kept going. So, it's found support where you would expect support to be, which is the 200. Now, what it does from here is going to be probably dependent a little bit on the dollar index, which we'll look at a little bit later. But I think I would expect some sort of support here. I wouldn't imagine it's going to be breaking through this part with a great deal of ease if it doesn't pull back at least to probably at least probably to that sort of 36.50 level. Again, that'll give the 20 a chance to catch up. Like, it has been very, very aggressive, but the moving averages are lagging behind a little bit now. So, there's no real reason for this to fall off a cliff any further without a pullback. So, probably just watch this one. If you're going to take profit on the short, this is definitely a level. It's the triangle profit. If you're taking the bigger triangle, the smaller triangle profit's already been hit. But at the very, very least, you've got a very strong area of support. If it does fall through this zone and the 200 doesn't hold it, the very clear level is this one here. You can see the role reversal. You can see how many times it was resistance level. That is definitely going to be the place that it will find support. So if the 200 doesn't hold it, the sort of 133.30 area will be the one. And look, it's probably what's going to happen more than likely, even if it does pull back. It's probably going to find itself down here. That's more than likely the place that it will gravitate to, because that is the serious level of role reversal, which is the resistance turning into support. So maybe a bit of a pullback here. If it does happen to break through the 200 without pulling back and starts to fall rapidly, then definitely there's about 100 pips there to be had before it reaches the real serious zone of support. So if this doesn't hold it and it doesn't pull back and it breaks through, if the smaller time frames give you an entry on a moving average, you can jump in on that and more than likely trade it to this level here. But the preferred move would be a bit of a pullback now, and then potentially try and sell it off a moving average or just a Fibonacci retracement down into this level here. Okay, we'll move on to the US dollar Swissy, which has finally broken that level that we've been talking about for so long. The trend, the channel has finally broken and broken down, which is a good thing. We'll put it to a daily.
You can see that we've had it drawn there for a little while. It finally broke down this week. And it did what you really wanted to do. It came down, went up and retested it from the bottom, which is ideal. And your selling was obviously on this shooting star candle here. Absolutely perfect place to sell. You can see the shooting star right on the break retest, which is just fantastic. The moving averages still, I mean, they've still got a bit to go before we get excited about them. But they are starting to separate a little bit now. This has got a lot to do with the weakness in the US dollar, of course. So it's no surprise to see this going in sync with the CAD, even though it hasn't fallen anywhere near as aggressively. But nonetheless, that was the sell, and you should have definitely been in that now. Look, where it could go, potentially down. This is probably going to be the first place that finds a bit of support around that sort of 95 flat. It's going to take a little bit of doing. This doesn't move in a great deal of haste. The US dollar Swiss unless it's on a real tear, which I don't can't really see that happening. It hasn't broken with that much velocity, so we'll keep an eye on this one. Probably more than likely continuing to short down to the 95, but the real trade's probably already happened. It should have been up at that sort of 96, sort of 20 area where that shooting star closed at the reversal, and you probably should have already been able to capture that move. And hopefully you are in it, but more than likely this is probably the area it's going to go to, around that sort of 95. If you haven't, go to the smaller time frames and perhaps look for a re-entry zone on a touch of a moving average. All right, the US dollar yen is the one that has bucked the trend of the US dollar based pairs. Obviously, it's just shot up. This hasn't been a surprise. It hasn't been in sync with the others for a little while anyway. But this big area of consolidation here finally broke through. You can see all the support it had on the moving averages. So it was a really, really good trade actually. It had that big boost up, and I know a lot of people got this. So I've had a lot of messages with people saying that they've traded this one successfully. Of course, it's running into that zone now that it's already kind of hit the first take profit, but it's got a little bit to go. I could see it definitely getting sort of to that mid 109 without too much trouble. It's still certainly got some power behind it. But if it does come back and retest this level here, I wouldn't be concerned. So around that sort of 108.50 would be a pretty reasonable retest now, I would imagine. And look, the thing is, we'll look at the dollar index, and that's going to probably play a bit of a role into potentially getting this one higher again. So we'll get to that one, and I'll probably I'll bounce back to this one on that talk. The gold, let's have a look at gold now. Came back and touched the special level. I mean, it's amazing, really. Like I said, I know I talk about role reversal areas a lot, but like how often do they play out? Like we see them every single week, and gold is no exception. It's been technically perfect, pretty much for the whole year. I wasn't excited about it on Wednesday, but it certainly found its support here at the sort of 1680 to 85 level. Very, very good role reversal area. You can see that it was resistance twice. It proved a great level of support there for quite some time. This is a daily, so it's definitely a serious chart. Came back and touched it there, and it's come back, found, not only has it got the Bollinger Band, but it's got the bottom of the Bollinger Band, the 50 moving average, and a very strong role reversal. So it was no surprise to see this launch, and it was a very easy sort of $20 trade, actually. So hopefully a lot of people got into that because it was a lot of a very, very high pressing score and a very good role reversal zone. So it did, when it was up here on the Wednesday, it was really in the middle of nowhere, but when it does this, it's a great trade. So hopefully people got in on that. If you're looking for it's sort of in the middle of nowhere land again now. So if you're not in it already, it's going to be probably a difficult one to get into. But maybe a retest of this level again, or a push up higher above the 1750. We'll see it potentially reach those new highs. But the trade's kind of gone on this one, so it's probably just a watch and see. All right, the dollar index is the interesting one. So it finds itself, obviously it's been selling off, and the US dollar based pairs, except the US dollar yen, have gone in sync with it. It's been a very, very big sell off. But it does find itself at a place of, pretty reasonable support now. Okay, so you can see here, we had two really good touches way back in October. And, you could see even here, it was a good area to actually hold this up. So this is the 96 sort of 60 area. What we probably expect to see now is, a bit of a change up. So it'd probably get a small change of trend. I'd be looking for, probably this is again the daily, so I'd be probably looking for a 1 hour change of trend, a series of higher highs and higher lows, and that could see us potentially pushing up some of those. The US dollar CAD, the US dollar Swissy, you could see them probably going up and retesting some of those areas that we talked about earlier. But of course, what this potentially could do is push the US dollar yen higher. So even though it's gone up without the power of the dollar index, if the dollar index does happen to turn, it's going to give the US dollar yen even more power. So it's one to certainly watch. That's why I think the dollar yen is probably less likely to pull back than the other ones, because I could expect here that the dollar index could probably give all of those US dollar based pairs the power they need to actually, at the very least, retrace. I'm not sure it's done. I'm not even, I'm not convinced it's done here, but I think it's probably due for that retrace up, and it's certainly found support here. So more than likely, the perfect scenario here would be, of course, to come up and potentially touch this 200 from underneath, which would be amazing. Probably a little bit of wishful thinking if it did get up there that high, but it certainly could. That would be the ideal trade, and that would coincide with the pullbacks on the CAD and the Swissy that we were talking about, and it would certainly propel the dollar yen probably well into the tens. But at that point there, I'm not convinced it's going lower. We've got a fair bit of work to do before it breaks through that 200 and up again through the moving averages. So the sentiment is still definitely short on this one, but it is at support. So be looking for a smaller time frame change of trend to try and take this one up. All right, the last one we will look at today is the pound USD. I've had a lot of requests for this one. Okay, you can see that obviously the dollar weakness has certainly helped this pair. Not as much as it's helped some of the others. I mean, obviously the euro's had a far bigger run, as has the Aussie dollar. But you can see here that it's at that zone now where we can certainly see a little bit of trouble. You can see it's already rejected off it. Any move forward now is going to find the 200 right in its face, and obviously this line of roll reversal, which was resistance up here. Look, it's one of those ones now, like you're probably looking for selling opportunities more than the longing opportunities. If we get a little bit of dollar strength, you would expect that we will probably see these sell off a little bit from their highs, and it's certainly in an area that it would more than likely do that. So probably maybe a little bit more of a push up, or potentially a change of trend on a smaller time frame for this one. So a bit of a series of lower highs and lower lows would be optimal to potentially get this one short. And play these ones against the US dollar anticipated strength that we've got.
So I hope everybody's had a really good week's trading. We've had some really, really good moves. So hopefully you've been able to catch some of those pips on some of those big trades, especially on some of the bigger pairs, which has been a really, really good time. Have a great weekend, and I look forward to seeing you all next week at the Wednesday night webinar and also the market wrap on the Friday.